Hello folks, welcome back. In this video, I will elucidate supply and demand. Supply and demand are negatively proportional to each other. When the supply of one product increases, the demand of that particular product will reduce. The concept of supply and demand is so profound that if you understand it, you will almost get the idea of everything that why the prices of oil, gold, vegetables, meats, and fruits go up and down. And that is solely based on supply and demand. Let me give you an example. You must would have thought that why the prices of gold are ridiculously high. That is just because gold is having little supply, and the reason it is having little supply, it is having higher demands. Let me give you another example. Why the prices of salt is too much low? That is because the supply of salt is too much, and that is the reason that it is having too much supply, its demand get reduces automatically. So basically the reason why I am putting this video just after the video on order blocks is that the order blocks and supply and demand are very much related to each other, and if I explain supply and demand, it will take me 5 to 6 hours to let you understand how the economics works behind supply and demand. So I won't waste your time. I will show you how supply and demand works on the chart and how we will trade it for our own benefit. So supply and demand are actually order blocks on the chart that pushes the market to the upside and to the downside. Let's say take this one. It is a bullish order block because it is pushing the price to the upside. As we can see, it pushed the price to the upside, so it is a bullish order block. And how we will define bullish order block? According to our previous video, that the bullish order block is the last bearish candle, this one, which pushes the price to the upside. So we will consider that bullish order block. So as I explained, that when the demand increases, the prices also increases, the rates goes up. So what happened at this price? When the market touched this order block, the market went to the upside, and by the market I mean the prices increased, the rates went to the upside, the rates increased. Now let me show you simple illustration before explaining it to you on the charts. Now let's say this one is a candlestick, for example, which I have marked in red zone, red area. So what happened? The market went to the downside, okay, and then the market approached this candle, and let's say it is a bullish candlestick. It is a bullish candlestick. So we will consider it an order block, and we will consider it a supply zone. And let me explain it why we will consider it a supply zone. So the reason we will consider it a supply zone, because as I said, when the supply increases, the prices will go down, the rates will decrease. And what happened at this moment, at this area, that once the market approached this area, this supply zone, this order block, the prices reduced, the market went to the downside. And now, for example, this is a candlestick. Let's say this is a candlestick, and this is a bearish candlestick. So how we define a bullish order block? We define a bullish order block that the last bearish candlestick before an up move. which pushes the market to the upside. And we saw the market went to the upside, and then again it approached this area. We can see the green zone, this one. So it is a demand zone. It is an order block, but it is a demand zone. Why? Because what happened at the demand zone, the prices go to the upside. When the market hit the demand zone, when the market approach it reverses and it goes to the upside. Why? Because as I said, from the demand, I mean the prices will increase, the rates will increase, and that's what happened at this point. So that is how we will see supply and demand on the charts. Now let me show you it on the chart. So let me remove it, let me clear the chart to draw it again to let you guys better understand what is supply and what is demand. So again, the last bearish candlestick which pushes the market to the upside will be considered as a bullish order block. It is the last bearish candlestick we can see. The market returned, and once the market approached this zone, we can see at this point the market went to the upside. We can see it clearly. So again, what happened? Again, what happened? Let me reduce it. We will draw another bullish order block from this last bearish candlestick. The last one got mitigated, this one. So this order block got expired, and we will look for a fresh order block. Every time we analyze the market, we'll look for the fresh order block. So now this one is a fresh order block. We can see the last bearish candlestick which pushes the market to the upside. So what happened? The market approached this order block, this demand zone. Okay, it will be called as a demand zone. So what happened? We saw the market, the prices increased. The market approached the demand zone and the prices increased. So now let me draw supply zone, like let's say this one. So how we explain bearish order block? We describe bearish order block by saying that the last bullish candlestick, which is this one, the green candlestick in between two red candlesticks. So the last bullish candlestick that pushes the market to the downside will be called as bearish order block. So what happened? You see this pin bar, the market touched the supply zone, the bearish order block, and once it touched the supply zone, the market went to the downside and the rates decreased. So again, let me show you another fresh example. No, I won't delete it, I will reduce it. So another fresh example is this one. We can see. So again, it is the last bearish candle, the red candle in between two green candles, the last bearish candle that pushed the market to the upside will be considered as a bullish order block. So what happened? The market approached this demand zone, and so again let me add one thing. The bullish order blocks will be called as demand zone, and the bearish order block will be called as supply zone. And once the market approaches supply zone, the rates will decrease, the market will go to the downside, and once the market approaches the demand zone, and the rates will increase and the market will go to the upside. So we saw again the market approached this zone and the prices increased, the market went to the upside. So that is how we will see supply and demand. So that is how we will trade supply and demand on the charts. And supply and demands and order blocks are similar, but we call the bullish order block as a demand zone and we call the bearish order block as the supply zone. Let me take you a little further, a little back on the chart to show you another example. Let's say this one. This is the last, you can see the last bearish candlestick which pushes the market to the upside, and we saw the market touch this order block, touch this zone which is a bullish order block, which is a demand zone, and went to the upside. So this is how we will be trading supply and demand. This is how we will be trading order blocks, and what we will do with our stop losses, with our take profits. So look at it again. Let me first clear it to have you better understanding where to place your stop losses and where to place your profits targets. Let's say we will take trade on this zone, this demand zone. The market touch this zone. So what we will do, we will place our stop loss below this zone. Okay, below 5 to 6 pips below this zone, because sometimes the market just mitigate this zone and uh, go a little below this area 2-3 pips. So we will place the stop loss 5 to 6 pips below this zone. So now where we will place our target profit target area, we will target the next supply zone, which is this area. We will not target its last point, but its initial one. Let's say this area. So this is how we will, and again, let's say, let me remove it. Let's say the market touch this zone, which is a supply zone. So how we will trade it? We will place our stop loss 5 to 6 pips above the supply zone, and we will target our next demand zone is a profit target, which is this area. See, the initial point of the demand zone. So this is how we will trade supply and demand in technical analysis, and this is how we will trade supply and demand on our charts. So guys, I hope I did justice with this topic and you understood this. You can ask any question in the comments and I will shortly reply to any queries you are having. So guys, that's it for today, and see you in another video with another topic and another strategy.